Okay, maybe hate is too strong a word. I should use the word dislike instead. Why I dislike Nio. So I will start off this video with a quote from Peter Lynch. If it's a choice between investing in a good company, in a great industry, or a great company in a lousy industry, I'll take the great company in the lousy industry any day. You know what else is great? Liking that smash button, of course, so don't forget to do so. Also, this video is sponsored by Webull. So in case you didn't know, Webull recently leveled up their game. From now until the 1st of August 2022, every single new sign-ups can get up to $120 USD worth of Microsoft shares. I'll leave the link and instructions down below. Essentially, you just need to deposit a minimum sum of 2,000 Singapore dollars and execute a total of 6 trades in the first 30 days. So 120 USD reward for depositing 1,400 USD. That's an 8% ROI in 1 month. Definitely better than Alibaba. Jokes aside, Webull also allows for investing into fractional shares. And I don't know why this is not a common feature for other brokerage platforms. So they pride themselves in zero commission trading as well. Don't let this 8% ROI deal get away. Link in the description. Now, getting back to the video. So I understand that some of you might be fellow new shareholders as well. So I have no beef against the company, by the way, in case you have formed that impression from the video title. So the first time a friend pitched this stock to me was back in 2021, when Nio was essentially crowned as the Tesla of China. Whenever I hear a company given the title of something of China or the next insert successful company name here, I immediately get an allergic reaction. Not because I don't like the successful company mentioned, but more so because of the hopes and dreams being pinned onto the new company that might or might not materialize. Besides, the Chinese and American markets have so much nuances and differences. Is Alibaba the Amazon of China? Is Baidu the Google of China? Is Webull the Twitter of China? So I came to a different conclusion, just so you know. I don't know about you. So let me qualify. I know that everyone is banking on the circular tailwind of the entire electric vehicle industry. Besides, in China's case specifically, the government has made it one of its utmost priority to contribute towards environmental sustainability, and electric vehicle is the future. Note, I use the word is the future, not might be the future. On top of that, to make the matters worse, Tesla had a huge run in 2020 through 2021. So if this happened in the American market to the so-called king of electric vehicle manufacturer, I guess we can extrapolate the observation to the Chinese market as well? No, lol. So for some context, according to a state-owned media Xinhua agency, there are more than 300 EV makers in China back in 2021. So since 2010, Beijing encouraged the sector's development by offering tax breaks for companies entering the EV market and subsidy schemes for consumers who purchase EVs even until today. Also, at least in the YouTube space, you see many quote-unquote educated creators talking about the China EV companies like Nio, XPeng, Li Auto, etc. However, based on the sales numbers in Q1 of 2022, the three are not even in the top 5. So they get an immense amount of press and coverage, at least in the Western space, purely because they are listed in the American exchange. That's it. Nobody talks about the rest because it doesn't get clicks, and viewers probably can't even buy or trade those said stocks. Now, if you were to look at the 300 odd EV companies in China today, we know that not all of them is going to survive 5 years down the road. Let's not kid ourselves. So if I were to draw parallels, back in the 1900s, there were thousands of automobile companies in the United States because it was essentially quote-unquote groundbreaking innovation then. Pull forward to the 2000s, remember the whole swaths of internet companies because the internet is going to change the world? Looking back, it's true. The automobile industry and the internet really shaped the world in profound ways. And some of those internet companies have went ahead to be one of the biggest companies on planet Earth today. But what about the rest? Google, Amazon, and Facebook step on their competitors' grave while climbing to the top. So to hedge my downside, I'm not saying that Nio will not be the next big thing. But at the current stage of their development and their plans, I'm not particularly interested in walking through the thick and thin with the company per se. Next, pivoting over to Nio's business model and financials. Nio positioned themselves to only target the premium EV market. So their cars are not cheap, just some references here. On top of that, they aim to build a close-ended community amongst the car owners themselves. So I've seen some of their marketing materials where they have a hideout for some of the car owners and their families called the Nio House. So it looks like an airport lounge, by the way, where all the cool kids hang out. And I still can't see how this business strategy is similar to Tesla at all. Anyhow, Nio's differentiation from other EV companies include the battery swapping technology and, more importantly, the autonomous driving technology. Truth be told, I'm not an engineer and I'm also not a car fanatic, which probably adds to the list on why I don't own Nio or XPeng or whatever the equivalent companies are. Full self-driving is another can of worms waiting to be explored. Level 1, Level 2 or Level 69. I only know it's a race against time for all these EV companies to be the first to crack the code. Without the code, these companies are essentially automobile manufacturers. At the end of the day, FSD or autonomous driving has an end goal, which is establishing a robo-taxi network, or some might call it autonomous driving as a service. So as far as I'm concerned, and as of the time of this recording, only Baidu and Pony AI managed to somehow convince the Chinese government to issue them the first ever licenses to charge passengers for self-driving taxis in Beijing. So even companies like Baidu, who is not an automobile company, is working on the FSD technology. So you can probably expect how bloody the competition would be in this space in the coming decade or so. Oh, before I forget, I'm quoting this from a Tesla investor. So if you're only producing cars, then you deserve having a valuation of a car company. Clearly, investors are pricing Tesla more than a car company. So will Nio or whatever other Chinese EV companies out there be able to reach similar valuation multiples? It really depends on what they can achieve at the end of the day. And as an investor, what do you think are those set of probabilities? So I touched my heart and I asked myself, I don't know. That's why I'm not even touching the stock. So if we dive deeper into the financials of Nio, their top line numbers actually look pretty decent. Revenue grew by 24.2% year on year. Delivery numbers increased by 28.5% year on year, from a very low base compared to their competitors, by the way. And that's about it. So gross margins actually shrank from 19% to 14.6% in the latest quarter. Since many people like to compare Nio with Tesla, Tesla had a gross margin of 25%. I wonder what happened there. So losses from operations ballooned by 600+%, contributed by increasing R&D expenditures and general admin expenses. So sales and general admin costs increased by 68.3%, but top line revenue grew by 24% only. You make your own conclusion. So to put the cherry on the top, share-based compensation seems to continue climbing, essentially diluting your ownership of the company. I personally think that this set of numbers are not spectacular for the business that you're trying to acquire. So for investors who are really interested in owning some sort of EV ownership in China today, maybe BYD would be a better bet. And to be brutally honest, I don't have an edge in understanding the EV market, both in China and outside of China. So it does seem like the market is attempting to price Nio as an automobile company, and I'm perfectly fine with that. So an additional upside would be Nio's ability to monetize their battery swap technology. But since I'm not an expert in that domain, I'm unable to ascertain the value of that vertical of the business. So I've seen many reports and watched many videos on their battery technology, and it's definitely something novel. So the concept is proven, but now lies the problem of scaling. And it does seem like after 2 years, 2 very long and hard years, there's still a lot that needs to be done. I hope I don't trigger too many Nio shareholders through this video, but feel free to leave in the comment section down below why you are bullish or even bearish of the company. So I look forward to changing my opinion if there was something that I missed out. Could Nio be the Ferrari of the EV market? I'm not doubting that possibility, but I sincerely feel that it's slightly early to come to that conclusion. In the meantime, if Nio continues to surprise the market on the upside due to execution, deliveries, partnerships, and even to their financials, I would be on board. Better late than never, they said. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!